Freddie Mac National Average is 6.12%, and we saw a little rise in mortgage rates after the jobs report on Friday showed 100,000 more jobs than what the market anticipated. Now, while we like to see jobs in our economy, this could be an indicator for the Fed to slow down their rate cuts, which would be bad for mortgage rates and rates overall. The Consumer Price Index report comes out on Thursday. It's expected that the headline number is going to be 0.2% less. If it's any lower than that, we could see a nice little move to the downside for mortgage rates. Overall, it's good to see the inflation numbers coming down, and that should support the Fed in continuing their rate cuts. With lower rates, we're seeing more and more refinances, so I wanted to cover 3 basic myths around refinancing. The first one is that when you get an appraisal on your property, it's going to change your tax basis. Now, first off, the appraisal does not go to the county. It stays with the lender. But also, your tax only changes when you have a change to the title. So if you are adding people or removing people during your refinance process, yes, that is something that can change your tax basis. Otherwise, it stays the same. The second myth is that proceeds you get from a cash out refinance is taxable income. This is not true. Mortgages are debts, not income. So rather than it being taxable income and hurting you at tax time, it actually may have the opposite effect. Depending on your scenario, it's very likely that mortgage interest is going to be tax deductible. The third myth is that when you refinance, you're restarting the clock on your mortgage. This isn't entirely true because even though you get a 30-year mortgage, all it is saying is that it gives you a monthly payment that is your required minimum monthly payment. But you can make additional payments on top of that so that you keep the same schedule as what you previously had to be free of your mortgage and have it entirely paid off. And you can do the math to come out with any number that you want. And on top of that, there's lots of different options for terms on mortgages. You can do a 30-year fixed all the way down to a 10-year fixed. So just depending on what your priority is, you can make your mortgage payments accordingly. So refinancing can help lower your monthly payment, but you can also use it as a tool just to pay off your mortgage more quickly by having a lower interest rate and paying less interest on the mortgage overall. I'm Mike Rambo with J&J Financial, and I hope you have a great week.